Welcome back. You're still tuned with us at the Big C on CNBC TV 18 Prime. Joining us now is Ajeet Khurana at Reflexical. Mr. Khurana, hi, thank you so much for joining in. And the kind of gains that we saw in the first half of 2025, the euphoria with the US president coming in, regulations being created, very friendly conversations almost on a daily basis, is something that the second half of this year is absolutely missing, especially this quarter of the year. And we've seen heavy profit taking because of that as well. How are you reading the two halves of this year, and what is your expectation on how this one really could end?
Leading to higher prices or lower prices. The theme over the last 18 to 24 months has been the stock marketization of the crypto market. This has arisen primarily because of two reasons. One is the ETFs, which came about a year and a half, 2 years ago. And the second is the digital asset treasury companies, which have started regular companies, listed companies, started holding significant amount of crypto. As a result, the investor characteristics are now very different than what we saw in the first decade of crypto. And I think that has been the driving force. And the outflows from the ETFs over the last 30 days are a clear indication.
Whether it has been about leverage positions or long-term holders, early adopters, we've seen profit taking come in from various levels, and that really seems to be hitting it.
Absolutely right. In fact, leveraged holders, leveraged speculators have been the driving force of crypto since forever. Like if you were to look at the volumes compared to the circulating supply of some tokens, it is scary as to how volumes can be so many multiples on a daily basis of the circulating supply, which means we are looking at very high leverage. Now, this has been the cause of volatility. But volatility works in both ways. What we are noticing now is despite a lot of good news coming in terms of who is buying crypto, we have still seen a downfall of 20% as you showed on the screen. And people are pulling their hair out and they don't know what is happening. I personally think that if you look at the ETF outflows over the last 30 days, for every 1 day when the inflows beat outflows, there were 2 days when the outflows beat inflows, and this has never happened in the history of ETFs, except in the last 1 month.
Oh, yes. And, depending on which report you're reading and which person you're listening to, there is this big range that the markets are talking about cryptos in the next 8 to 12 months. So while most people and the technical chartists believe that we could be heading to 93,000, and if that is hit, then it's opened the floor for 70,000 on the lower side. But I was also reading the JP Morgan report, which says 170,000 is a possibility in the next 12 months as well. So as I said, many reports, various views as well going forward. Are you risking a forecast there?
So here's the thing. I will risk a forecast with all the usual disclaimers that I may be invested in it and I'm not a financial advisor. But I think that if you look at the two numbers you gave me, which is 93 on the down and 170 on the up, my belief is that in the next 12 months, we're going to see both of those numbers, which means the volatile bumpy ride is going to continue. I had placed some buy orders of my own below 100, and the first order got triggered at around 99. I have orders far lower than that, even lower than the 93 you talk about. At the same time, at around 170, 180, 200, I would be profit booking.
Ajeet, talk to us about the kind of AI threat that crypto as an industry really seems to be looking at. I mean, it seems to be growing as we've seen in the year 2025.
There are two technological threats that crypto faces. One is with quantum computing, which may make all of these private keys very difficult to defend securely. I see that as a threat to everything in all of financial technology, not just crypto. I think we will survive that. The second threat, which you rightly said, is the AI threat. The AI threat has two dimensions to it. One is that it is now the more fancied technology compared to blockchain, thereby moving investor interest away from the sector that we have so much cherished in the crypto world. And the second thing is that the optimization that AI brings in is opposite of the redundancy, though security that blockchain brings in. So let us say, in principle, these technologies, while they work with each other pretty well, but they're also opposed to each other. And because of both of these threats, I think that could be a slight bit of a dampener, not enough to destroy us, but still enough to poop the party.
All right, really exactly seems to be doing that. But they also talk to us about crypto vis-a-vis the blockchain. And would you say blockchain as an industry seems to be growing all right at a steady pace? It's the crypto market volatility, which perhaps is something that we've learned to live with.
If you had asked me this question like about a year or more ago, I would have said, no, it's basically progressing hand in hand and they're doing the same thing. However, with the advent and serious takeoff of tokenization, where real world assets, traditional assets, financial assets are getting tokenized. And a lot of these don't have a crypto asset along with them, but an underlying physical asset. The blockchain industry has assumed a life of its own. Several regulators as well as industry bodies around the world are sold on tokenization, even though they may not be sold specifically on the cryptocurrency world. And I think that, yes, blockchain is also taking off in a very big way, probably a bigger way than cryptocurrency is at this point of time.
Ajit, the other thing that the crypto also has a tough competition with has been gold. But again, I forget the research report that I was reading, but it also said gold versus crypto. Well, crypto perhaps could do better in the coming years. I don't know if you read that report, but how would you look at that statement?
So from day one, a lot of people in the world have been comparing Bitcoin specifically and calling it digital gold. So here's the thing. I think that the extraordinary financial feature of gold is that it presents some sort of a hedge. Like my parents and my grandparents would also have said something similar. Uh, People are saying that all the characteristics that make gold a good hedge against other forms of financial trouble are present in Bitcoin and in better measure. I would agree with that. In fact, that is the entire bet that I have also taken. I think that as time is progressing, the market cap of Bitcoin will keep becoming a greater percentage of the market cap of gold. And we have in the past seen very high correlation between Bitcoin price movements and gold price movements.
All right. So you're agreeing to the fact that crypto perhaps could do better going forward.
So, Manisha, what is happening is that I have stopped using crypto and Bitcoin to mean the same thing.
All right.
I'm finding the non-Bitcoin crypto is behaving more like high volatility tech stocks, and Bitcoin has more characteristics of gold. I don't think crypto has characteristics of gold. I think specifically Bitcoin, which is of course crypto, has the characteristic of gold.
Got that point. So, I was also going through in the last 24 hours, Ajit, on how various of these cryptos have done. And even as almost everything saw a bit of a decline in last 24 to 48 hours, there has been a lot of profit taking. I mean, on Friday, we did see Bitcoin at one point in time fall below 100,000 and stayed there for a few minutes as well. And then there was something like Zcash, which just surged up by 18, 19%. Would you say there are some of these old coins which seem to be doing way better? Are they worth a look at all?
So Zcash or Zcash is the descendant of Monero. Not technologically, but Monero used to be the biggest privacy coin out there. And if you wanted to do transactions that were not traceable, that was the only resort that you could take. Zcash has become more popular that way. See, the thing with crypto is that narratives keep coming. So if you were to look at altcoins, you will always find some altcoins doing very well. But if you were to take the same basket of altcoins, like how the stock market has an index, you will notice that the altcoins are not doing very well on the whole. And while Zcash has done phenomenally well over the last 1 month, I think we are talking of like many hundred of percentage, and there are a few others such as Aster who have done likewise. But these narratives don't stay. That is the problem.
Oh, well, yeah, that is the thing. But Zcash clearly seems to be catching your eye in the last 2 or 3 days with the kind of run-up that we've seen. Coming on also on the various aspects within the blockchain and crypto and Bitcoin as well, as you're saying, there have been certain reports also suggesting on how mining seems to be taking a hit in various geographies there. How have you read that, and how would that impact the overall industry, whether it is cryptos, Bitcoin and blockchain for that matter?
So mining does not influence the industry, the prices. Prices influence mining. Let me explain. So if prices slowly go up or down, the difficulty level of the mining algorithm adjusts and there is no extra profit or loss to take. So all the profit or loss occurs when there is rapid movement in the upward or downward direction. If it moves up suddenly, then the algorithm takes time to become tougher. As a result, miners make a lot of money. And if it moves down suddenly, they start making a loss. A loss basically means that the cost of producing a Bitcoin becomes more than buying it from the market, which means you would not mine it in the first place. And because of the extreme volatility in both directions, miners have had to turn on their machine and off their machine too many times. And yes, mining is turning out to be a very unattractive proposition over the last few months. Though governments and very large telecom operators such as DU in UAE, Dubai, are actually now offering mining as a service to their customers. So the industry is growing, but the economics are taking a hit.
So my final question, Ajit, really is about the economy of blockchain then. How have you seen money funds coming in? further investments, more developers perhaps, startups, of course, that's another number that I haven't seen really grow, especially when it comes to India, but you can help us understand on how global markets seem to be looking at that.
So all three of those. First of all, funds, they entered in a big way in the 20 period, maybe first half of 21. They realized it was a very speculative asset, and though VCs are kind of gamblers, but this was a bigger gamble than they were willing to take. Beginning early 22, a lot of funds who had speculatively entered in 2021 have all exited. There are some crypto-specific funds which, of course, continue to operate in this space. As far as startups are concerned, one of the not easy to understand aspects of crypto startups is that they take birth by getting grants from various blockchains. This is unlike the non-crypto startups who will get, let's say, a small amount of friends and family round of money. These grants have largely disappeared, not completely evaporated, but largely disappeared. And this is not allowing new startups to get off the ground because they need at least some money to get going. Because in crypto, you do any transactions, there's a gas fee to be paid, especially on platforms like Ethereum, it could be substantial. So there is definitely a slowing down globally on startups taking birth. And finally, I believe that we are in the grow up stage, not the startup stage of cryptos. As a result, bigger and bigger players are coming in. For example, there was a recent ICO, that's the initial coin offering, at a valuation of 1 billion, and they were raising 50 million, which got oversubscribed 27 times. This happened just 7 days ago when the market supposedly is not doing well.
All right. We are not in a startup stage. We are in a grow-up stage when it comes to blockchain and crypto. And that's very, very well said. As always, Ajeet, thank you so much for joining in. What a pleasure having a conversation with you. And with that, it's a wrap on this episode of Big C. Thank you for watching.